you know where I stand. This is a bigger scaled event. We've got a synchronized Western hegemony, which America is the primary hegemon, but you've got the United Kingdom tied very much to that mast, pursuing awful policies, trying to win the race to bankruptcy. You've got Europe, you've got all of, Australia, New Zealand, Canada. This is going to be far larger, in my take.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce platinum eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is our good friend Francis Hunt, the market sniper. Francis, thank you so much for joining us today.
Glad to be back with you. Thanks for inviting me, Elijah.
Well, it's great to have you today. Thank you so much for your time. I did want to discuss the gold and silver markets today. We're continuing to see quite a bit of strength in both markets there, and we've also seen a huge move in platinum that I'd also like to get an update on. But first, gold and silver at the moment. What is your take?
Good question, and I've got good tidings, I suppose, for the precious metals fans. I'm really excited about this current move at the moment, and it's sometimes best explained with the chart, so I'll maybe go straight there because I can walk you through it. And I can say to you, we made 3,500. Let me get that share screen up and running. Some folk have been a little bit impatient because, we kind of made 3,500. You may recall, Elijah, we were with you on show and when we were on a 2,000 point, and we pointed out there's an HVF structure just sitting on top of the 2,000. The low was about $2,011, and we said, next stop, 3,000. That was a big move. It was a breakout. We said once, twice, 3 times a lady. We showed you that technically. And we made that 3,000. We had a little bit of pullback, but actually we continued. We had the tariff tantrums, and actually we got a second surge that took us to the logical next round number that sits between 3,000 and 4,000, and that was the 3,500. So that is a touch just at the 3,500 level after passing the 3,000, which is somewhere down here. And this has formed a beautiful continuation pattern. Initially, there was some hard selling. You could see strong selling off leg there, a bounce, selling off, bit of volatility and chop going into a 3,120 low. That kind of defined the range, 3,500, 3,120. And what we've been doing is we've been tightening with inside that range. And the overall opinion is continuation is expected. So this is a continuation pattern. It's also a volatility constriction continuation pattern, which is likely to lead to a tightening that gives you built up pressure that powers the next leg up. And we've been performing beautifully towards that. So just to change to a slightly more shocking pink color there, this is a simplistic, diagrammatic from the pivotal highs to the pivotal lows. We're kind of here. We look a little bit toppy. I think we could roll over for a semi-dip more. We might even make it here. So I'm not saying this is the absolute final low, but this is a squeeze. And we often say that. We sometimes say squeezy, squeezy, Japanesey, and as kind of catchphrase for us. So we have a defined range, which was that high, and that key level, which sits between 3 and 4K, the obvious round number 3.5. I've drawn the blue line there for that. We sort of had a low level at around the 3,120. And what's actually happening is we've made a lesser high and a higher low. So this is constriction. This is the ironing out of the volatility. And what tends to happen after you've made a kind of really substantial move. Don't forget, we were at 2,000 November 24, and we said 3,000, and you've done 3.5. Now, done. We did just a technical touch and pull back. But that's a really substantial move, an excellent move. And it's understandable now that you'll have a bit of a rest period. This was April, I think, the high. That was peak tariff tantrum. That is a key moment, by the way. I'll point out to our American audience, hello and happy birthday to you all. Just missed your July the 4th, but wishes to all your American followers. what's happened, that was peak tariff tantrum. And on that day, rates spiked up, the dollar went down, and gold blew off to that 3.5 high. It takes you back to April. And then tariffs were walked back. The tone was changed after quite an inflammatory tone. So that just warns that every time rates go up doesn't always mean the dollar goes up. Just a little bit of a warning, because there's some people with adverse messages. It can mean that, and it could still happen. I'm not saying it won't, but if you're seeing divestment out of America, and that doesn't always mean foreigners, by the way, that was actually American wealth that went offshore. So treasuries were sold, turned out of dollars, into something else, and I will show you what I think it's been, because it's certainly been gold as part of that. But in the fiat world, there also has been a bit of a run into the Swiss francs. IMF published its latest COFA data yesterday, which tell us how official FX reserves are allocated across major currencies. Remember, gold is not quite as liquid as a fiat, which can just straight away be sent on a SWIFT system anywhere in the world. People still need a fiat. They just want the least bad one, given that they're all largely bad. Which is the least bad one? Q1 2025 saw a massive big jump in Swiss franc allocation, which did not come at the expense of the US dollar, however. I would argue that it did. I don't see how they can say that. I think there's been an increase in gold, and that is an anti-dollar trade, even if your dollar stood still. And there'll certainly be a decrease possibly in euros moving into the franc. We've had the euro-Swiss franc collapse before, and the Greek crisis as well. So the franc has been a winner as well as gold, but the long-term winner for balance sheets and assets is without doubt gold. But I just thought I'd throw in that extra little point in of order that people are choosing the least bad fiat. It is, of course, a lot smaller, and even a small amount of dollars going into a Swiss franc causes a disproportionate move. We have been Swiss franc long, Japanese yen short, because we feel the Japanese yen is the trading, the wholesale currency for cheap borrowing for America, and that the carry trade runs a lot deeper. And our technical analysis gave us that trade, but fundamentally, that's my feeling of what the story would be. So there's a bit of fiat news for you, but in the end, gold wins, and this move is looking for 3,700, 3,750. So between 3.5 and 4,000, the next logical level, and this has derivatives and pegging as part and parcel of this, and you tend to have sort of orders stack in a bid stack around round numbers. That means you tend to get vacuums. If instead of everything being evenly distributed, you tend to get vacuums just before logical round numbers, and then many more orders stacked at the round numbers. And we call that voids and vacuums. And that sees you move very fast. And you make the same profit when you cover a $10 move, whether it's $10 between 3,669 and 3,679 versus 3,690 to 3,700 or 3,740 to 3,750. It's still $10, but you will get different degrees of stacking in depth across it's not evenly distributed, and you tend to get very quick moves in the numbers before round numbers, and it builds momentum, and then it often shoots through, and then it pulls back through the round number. So our expectation is there's a 370 run in this setup. This setup isn't necessarily complete, and I think it can come a little bit down, but I don't see it coming all the way down. I think buy limit orders in a box round here for investment gold would certainly be a great entry, and we are actually taking a trade on that, which we expect. We're not day traders. We'd expect the entry to occur midweek next week in and around that pink box level, and then we'd expect to see a 3750 run. Don't forget, you'll be buying below 3295 if we're correct, below the 3300 mark. Look to accumulate. I'd probably place stops initially at the secondary low, so that's why I've pre-positioned this risk-reward profile for those that like a trade. Remember, non-advisory. We take ownership for our own outcomes. This is not advice. It's just talking about what I intend to do, and in part process already am doing. So that's a target. By the way, if that was the final low, that stop would go up to there, and that increases your reward and buys us the right to add further as we break the green line. So if I'm allowed $1,000 risk, and it was $1,000 risk at that deeper stop, to there, and I now reduce that. I've bought the right to wait up, to maintain myself at that $1,000 risk if that is run. So that allows you to get fairly big, and then that will give you a very spectacular 25.9. Of course, if you're adding and it's trading up, your average entry won't still be down here. It'll go up a little bit, so it won't be the full 25 RRR. But that's how I manufacture a trade. That's what we do in the marketsniper.com in our community with Method. These squeezes are rare opportunities for tight risk and asymmetric reward. Let's say you're not a trader. This is all just too technical for you. It's a great time to buy investment gold right now, in my opinion, and capture the prices here and through the next few days into midweek might come off a tiny bit. My expectation is you're going to be taking the next big peg levels in those derivatives. It's called pegging because of derived markets on those round numbers. And I think it's north of 37, potentially 3750. So gold, very positive. Let me let you come back at me on that.
Now, one of the things we've covered in the past is the gold-silver ratio. When the gold-silver ratio was above 100 to 1, we were talking about this and how it could potentially go even higher. We've seen it pull back around the 90 to 1 ratio as we speak. What is your take on that? If we do see gold continue to run from here, possibly 3750, as you're mentioning, on its way to 4,000, then what does that mean for the gold-silver ratio?
It's a good question, and I'm going to take you first to silver, because if I'm bullish gold, should I not be bullish silver first of all? And then the question becomes which one outperforms. In other words, does the gold-silver ratio continue on its downward trajectory? During the bullish phases, I think yes, that it continues on its downward trajectory. So typically, if they're all going up, I'm going to expect the gold-silver ratio to come down. Let's go have a look at that silver on its own, and I'll come back around at the same time frame and answer more specifically on the gold-silver ratio. I want to highlight a couple of things that happened previously as well, because I think we're getting a little bit of a doubling up event as well. Let's go to the 4-hourly time frame, a little bit lower. I'm even more bullish the silver now. So some people will say, but hold on, weren't you the guy that also said the gold-silver ratio could spike higher? Yes, we'll come back to that, and I am that guy, and we'll explain that. But right now, that's not the highest expectation. We had two wind-ups here. One was a fractal of the other. We got part break, and then we overperformed for the target. The target, this was quite low. In fact, these lows were in and around 31s, by the way, so we're doing well. We're working our way up. Some people are, there's not enough gratification. Setups all the way, overperformance to targets, and then there was a degree of exhaustion. So what happened is you got a big setup, and then you got a secondary setup. And then once it started to move, you got a fractal, a third, smaller one, that continued to drive us higher. So there's a little bit of similarity here, and I'm going to show you why I say that. So we drop down to the current price behavior a little bit more closely, and I'm going to throw my indicators on to make these things pop a tiny bit more for the untrained eye. So that in itself is a winding up setup. That is suggesting $38.28. Remember last time we got an overperformance on the big one with the second helper that came along. We've got a similar situation with a little bit of a helper over here as well. Again, it might not pop for the untrained eye, so I'm just going to highlight it. But you're in there. So you sometimes have initially a slow start and you wind up again. Now, we maybe just didn't get the right data about unemployment or something else and wanted to go, but it was a bit of a hard sell into the wrong kind of news. So it coils a second time on a smaller time frame. So we've got that happening, and I'm going to put again the indicator on that, and I'm going to stick it on there, and you will see that again we've got a little bit of a wind up suggesting that we're going to go again. So it's getting a little bit busy there, so I don't want to overcrowd the chart, but that's all pointing to the potential of 38.28, but potential overperformance to that, because that's what happened last time. We got one setup, it wasn't quite the right moment, it started its move but went into a holding pattern and squeezed again. And then it was released, and then it overperformed. And it seems like that as well. So it's hurry up, start, relax, wind up some more, and then go. And I'll just point this out as an interesting repetition, like a sort of a mini cycle repetition. And so we're very bullish on silver right now. And I think in percentage terms, that's going to be an outperformance to gold. Gold going from roughly where it is, around the 3,300s right this minute, going to 3,700, let's say. That's about $400 on a 3.3. $300 would be about an 11th, so it's a little bit more. It's about 15, 20%. I would imagine that we'll beat that on the silver here, and we could also be beating it on the platinum. That's almost the contest actually for the outperformer for me, those two at the moment. But you need the king, the old aging king, to get up from his table first and move. So we're very dependent on gold going up. If the gold pattern fails or extends a little longer, all of this will be also put on ice again for a while. So please understand, it's a bit like the altcoins can't go up if Bitcoin doesn't. Only gold is the original and silver is the original follower. So they need both. So in terms of the gold-silver ratio, I would expect it to go down. Let's bring up that chart because your question was originally on that. And then explain why did we say careful. You can't say exclusively that the top is in on the gold and silver ratio. And I want to remind people of those details of why we said that. Right now, we are having a bleed-out crisis. It's a weak economy, in my opinion. Despite the statistics, I feel that there's a lot of misrepresentation. You've had 315? I'm not quite sure. 215,000 jobs removed from the non-farm payrolls that were claimed to have been done just in the first half of the year. So as well as Happy America Day, happy H2 for everybody else, we're into the second half of the year. So I'd expect this to continue down. But the warning is, if you suddenly get a crisis, you see continue down, there's a bullish phase, continue down. If you suddenly get a major escalation in the crisis, that there's a dash for liquidity, where everyone panics and even gold sells off a little bit because nobody's got any money. Let's say global bank hack, pandemic Mark II, a shock and awe event of an economic nature or non-economic nature, but has economic repercussions like World War III. Anything of that nature. And I do feel we're being set up for some big problem to come. What tends to happen is everything gets sold because you have to have money. And in that environment, gold doesn't go down as far because the biggest buyers are the permanent money, the long-term money, the central banker money, and they will gobble up and they'll dump treasuries for gold. They're not going to be buying silver. And that's why silver is more volatile to the downside in a demand-destroying event type environment. And I still feel there's an event of that nature. We're bleeding out and we're managing to have a very difficult market, which is releasing some of the pressure, but I fear it will go into a capitulation and a major event at some point. That's when you get that secondary move. That's when you go there and then you still get a blow-off. Then afterwards, you can talk about what comes after that. As you saw here, you had a pullback there and then you still went higher. And if we look at CV19 as an event, if you think the crisis has to at least match that by scale, and given the debt situation, the repo market situation, the likely derivative situation, they only get more intense, not less. We didn't fix anything. We haven't been climbing down the mountain and got less far to fall. We've been adding. Just look at the big, beautiful bill. This is not taking you in the right direction. You're adding, piling on more and more. So if you're in the camp that there is at least the equivalent of CV19 type economic event to occur, only different themed, because nothing is identical, or bigger, which is my position, then you should expect that at some point everything that isn't nailed down is going to need to be sold, even good assets, which I consider gold and silver both to be. In that environment, silver sells more because there's no central banker bid who can be buying gold and on less emotional, less affected by whatever that event may be. So just an additional clarification. While we're generally in a bullish setup for gold and silver and platinum, I expect silver and platinum to outperform gold. When we go into contagion, that's when it flips. And that event can still occur even though for now we've gone down. And I'll also highlight technically the pattern was like this. That pattern technically is also not invalidated. It looks something like that. So all that's happened is we broke out and we're doing a return move at the moment to this range. That can come right into the midpoint and bounce up again. So happy days while it lasts, but that I don't lose my head just yet and call that. And I'm looking for invalidation. You got to run the 78.5, and you want to, for further confirmation, run the 72. So until we've done that, we're in a twilight zone where anything still remains possible. So a little bit of qualification, and I'll let you come back at me on that.
And as for platinum, it being up 40% this year, some people are cautious based on the structure it's been making over the last few months here. What is your take currently on platinum?
I did do this platinum chart a while ago, and I also did another one which I won't be showing because it might be a bit too much for what's a fringe metal. But I do think, if gold's king and the money of kings, silver is the money of the people, I would say platinum is the silent emperor. That's almost too noble to be even as something as common as money. And I'm a big fan in its rarity and its availability, and the places that it's available from makes it incredibly unique. This is the platinum chart for an extended period. It's quite heavily annotated, so I'll take you through it slowly. But this is 1973, bottom left corner. So it captures the full bull market last time. We had a big move up there to 1,040 when it was down at $130 odd. That was, by the way, when gold hit 800. So note that platinum exceeds gold, typically, and I'll explain what's happened about the last 2 decades. In a minute, where it hasn't. But generally, it's far rarer and has really unique properties. It doesn't tarnish like silver. It's more dense than both gold and platinum, so it won't scratch on jewelry nearly as easily, yet is incredibly rare and really unique properties. This was our classic squeeze, our volatility squeeze following the 80s that brought us into mid-90s to late 90s. Which was all .com and rah-rah, everything anti-metal at the time. And from that 334, the last low, we ran right the way up to 2,300. Now, I would have expected a similar squeezy continuation pattern. So we have a bull market that lasts normally can be as long as a decade. In this case, we don't have the full history. That's about 5 years from 75 to 80. But you can see from the lowest point in 99, it ran to 08. 07, 08 makes sense. That was a decade long, but it was more considered. It was a strong move, mostly green candles. By the way, just for time frames, I've had to go quarterly. That's each candle is 3 months. So only 4 candles is a full year. But that was a 400% move from the last, in fact, my apologies, from when it triggered our upside HVF, which was 464. It wasn't from the low, it was even more from the low. But from roughly when it took out that third high, which is what it's doing now. I'm going to show you how this structure is very similar, actually, to the one that's existed from 80 to 99. And that took 19 years to set up. In the same way, this is very similar, but there's one thing that's different. So there's one aspect, one impulse, second impulse, third impulse. You have a very similar thing. You have an extended second, like this, down, 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 and then into the COVID low, which is your second. That was your one, and then this is your third right here, this weekly squeezy that we've been talking about right there. So it is similar. However, you'll notice there's much more selling through this decade, and it didn't hold a low. You kept running new lows, and CV19 was the absolute low. Whilst here you had higher lows as you went through the decade. Here you made lower lows, and a lot of this had to do with the green agenda. And palladium was doing the exact opposite. It was a substitute metal, and it absolutely surged. So platinum not only it's not a bull market, it's a big old inflation gobbles us up and we go sideways in a continuation pattern. It also faced the indignity of being substituted by palladium that initially was cheaper, but ended up getting more costly than both gold and platinum on a mega surge in terms of the green agenda, which largely to most people started to be looked at with a far more jaundiced eye there by most real scientists anyway. So you're looking at something that instead of it had its surge period, has its continuation period, actually had a 400% move from when it took out that third high, and then got battered on two reasons. It went into a bear market and it got replaced and substituted. So it's the great unloved, yet he remains the silent emperor, the rarely seen, ephemeral phantom that's almost too good to be money. And there he sits right there, and that is a huge breakout, and he has just broken out its third high. So what I did is I highlighted the three highs here again in these three impulses. The low, and then that one. It's just done that right now. Now, if you think it's going to be just like other bull market runs, and you don't think this is a bigger scaled event, again, you know where I stand. This is a bigger scaled event. We've got a synchronized Western hegemony, which America is the primary hegemon, but you've got the United Kingdom tied very much to that mast, pursuing awful policies, trying to win the race to bankruptcy. You've got Europe, you've got all of, Australia, New Zealand, Canada. This is going to be far larger in my take. But do I know? We're talking about the future? No. But I think it's going to be a bigger crisis. If you think it's just going to be the same as Volcker taming, and bear in mind, America went into the Volcker years far less indebted than they are doing now. And the big, beautiful bill shows no sign of any Volckerisms in terms of presidential fiscal behavior. So there's no tightening of the belts. You should expect at least a 400% move from this level. And the duration, the time, we were also doing time, how long were these cycles? You would say by 2033, sounds a million years away. These years are just ripping past. You should be 400% higher at 6,566. I personally think that's a massive undershoot. I think if gold gets to 20,000, you could have 25, 30, even $35,000 platinum. And there's still possible, in extreme cases, upside. I don't know how bad or how extreme things get, how much fiat really being created that'll suddenly find a home. I do think we're going to have a digital option quickly rushed, so not too much ends up in the physical money. But despite that, it is a precious metal. It'll absolutely hold its value. There's no longer finding a substitute. It's no longer under the same pressure, duration, or that the green agenda brought about. And if it is, it's showing that it's shrugging that off, and the Chinese are quite happy to accumulate it. So to me, platinum is cheap gold right now. That just one thing for people to bear in mind, though, it's not as easy to trade because it's so thin and hard to find. Your bullion dealer might not have as much of it. If you're on the wrong hemisphere, you might pay VAT on top of it. And thankfully, not in the US. I don't know about Canada. So it's harder for certain people to buy, and it may be a touch harder to sell. You might face bigger spreads, but it is tradable, and we have been trading it, and we have brokers that provide services for that. So that's the take on platinum, with quite a detailed chart and time frames from lows to lows, highs to highs, and you're looking at about 28 years, 25 years from the low to the high, and we barely started. We're 2 candles in from the breakout. What you are here, this is what I'm saying. That's where you are right now. You've just taken that third high out. You've just taken that third high in terms of that move. And I think we get a bigger move than last time. So it could have immense upside.
Well, it should be exciting times ahead. I mean, I know our viewers also can look at some of our previous interviews to kind of see and hear your opinions on the coming reset, what's going to happen there and everything like that. So we really do appreciate your time as always. If our viewers are interested in learning more, where can they find you? And did you have any last thoughts for our viewers?
So, especially to a very strong American audience, to talk negatively about the economic policies that are being pursued at the top echelons is not to hate on the citizens or to wish ill. You really need to profit out of the skullduggery of government, who is not your friend but is your enemy in terms of sound money principles. You need to profit from this. It keeps you, you're a monkey on a grease pole and you are sliding down. If you just accept that and say, well, okay, and I'll carry on working, your government's going to go into a scavenge mode on taxation. Because it will no longer have the funding mechanism to the same degree that is the debt market. That's the problem with debt-based collapses. You're having your overdraft pool. Now they can't spend so proliferate as they used to. They got certain policies they will always do, like funding Israel and everything else. So you're going to get cuts at home on service provisions. That could be roads, more potholes, more everything, less cleaning up, less regular refuse collection, yet you'll be asked to pay 30% more. The prices will go up, energy grid costs. All of these things will look like they have their own indistinct drivers. The key thing is it's dollar debasement. It isn't indistinct drivers. They'll tell you there's a failed cocoa crop. That's why your chocolate, your cocoa, your coffee, bean costs more, etc., etc. You are facing a debasement of currency. There's no debasement of debt. Remember, you lost 52%. Go see your TLT chart. We've shown it many times on this channel, without also debasing currency. It absolutely goes hand in hand that money is borrowed into existence. So you are facing currency debasement. People will have seen that the dollar has not been particularly strong. You will import inflation and living standards go down. How do you retain your living standards? That's what I want for you. And even go forward, actually benefit out of this process, you need to be overweight in the right things. So our whole YouTube channel is focused on how do you build wealth, protect that wealth, because they're going to be coming for it far more than they've ever come before in terms of tax scavenge mode, and also secure yourself freedoms and liberties with optionality. That's our key focus for reset times. This is not traditional financial advice for traditional financial times. And in fact, we're non-advisory. So we'll show you what we do to build wealth through what has to happen. All the negativities that must happen and all the suppressions in one place actually cause opportunities in the other. So I'm wearing black glasses and a black shirt and I sound like the Grim Reaper. There is no hardship in one place that doesn't lead to money flows flowing somewhere else. And if you get in front of the wave, you ride the wave. Otherwise, you get dumped on by the wave. And you've got to decide, how positionally am I going to put myself forward for these events? And this is the tsunami of all tsunamis. And you can actually ride your way to the top, to the moon, or you can be dumped by it all. And positioning is everything, and we're here to help with that. And our YouTube channel is The Market Sniper. And if you have an interest in crypto, The Crypto Sniper, and we're on X under the same name as well. Thanks for having me on, Elijah.
Well, thank you again for your time, Francis. You have a good day and God bless.
Same to you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 8th through July 15th, 2025, while supplies last. First this week, we have 90% constitutional junk silver at spot price. That's right, no premium at all, just spot. Next, backdated 1-ounce Platinum Eagles are only $249 over spot. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.